Good morning, traders. It's 8:01 a.m. Chicago time on Tuesday, the 30th of November, the last day of November 2021. This is it. It's over. We're moving on to December tomorrow. Remember that it's end of month for the close. This is episode number 2125, 2125. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. We're going to jump on over, as we always do, as we follow our daily routine into our convergent trading pre-market summary sheet. First thing I want to point out is, again, to remind you to take note of the rotational statistics of the various products, ES, NQ, RTY, YM, CL. These are the most popular products ranked by volume, not daily volume, but retail volume. And take note of the rotations, because that impacts how you size your stops. 1 second. The air is so dry here in Chicago now that it's cold. I probably need to get a humidifier into the office. Here's where the market stands. We have mild risk-off sentiment. We're seeing the market recover a little bit. The S&P and other indices have taken a pop here in the last few minutes, and so it's a little bit better. But earlier today, the indices across the board were worse off, and now they're recovering slightly. The Nasdaq has been stuck under its the full session mid, which is at 16,339.75. It's been stuck there through most of the session, and it's finally breaking out and now pulling back to that 16,339 area. We have crude oil, which was down about 4%, that it has recovered slightly. Crude got as low as 66.51 or so this morning, and it's popped higher to 67.29 currently. Crude just taking an absolute beating. And then, of course, ETH is really outperforming Bitcoin currently. ETH has been pushing higher and better than Bitcoin overall. In terms of earnings, we have Bank of Nova Scotia and Junco Solar. After the close, we have HP, Hewlett Packard, and Salesforce, as well as NetApp. The main driver today, and the main driver on the close yesterday, was Moderna's CEO. Remember, Moderna was Pfizer and Moderna are the biggest vaccine providers for COVID. J&J is the third one. Moderna CEO expressed concerns over an FT interview about the vaccine's ability to push back on the Omicron variant that sent the markets pushing down. And then this morning we got the EU inflation, and it showed that inflation is relatively hot in the Eurozone, and the inflation rate came in at 4.9% year-on-year flash for November versus the prior 4.1%. So it's really a relatively big pop. Core inflation rates at 2.6%. The prior is 2%. The inflation rate month on month is 0.5, prior 0.8. So those came out at 5 a.m. Eastern. We did get Case-Shiller just now, and we're looking for Chicago PMI. Chicago PMI expected at 67. The consensus is 67, forecast 68.3. We get Fed's chair at 10. That's going to be a big one, and Treasury Secretary Yellen also at 10 Eastern. Consumer confidence at 10 Eastern. Fed's Williams at 10:30. Clarita at 1. And then we get the crude oil stock change for this week at 4:30. And then this evening we get the Caijin manufacturing PMI out of China at 8:45 p.m. Really a busy calendar. Looking at the S&P, we have a multi-distribution profile so far. The auction has a multi-distribution uh, 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 shape to it. We opened up, we rallied a little bit to 46.67, and then we exploded to the downside at about 11 o'clock last night, Central or midnight Eastern, and have moved into a lower distribution. The point of control is at 46.11, and we've been sitting here until this most recent push higher. The S&P is up against its full session mid at 46.25, really squeezing against it. As I said, the NASDAQ pulled back to that 16,340 mid area and is now continuing. That would be a setup for me. Of course, I'm not on it. I'm here with you. But the NASDAQ is pushing towards its low volume node and likely to squeeze into settlement at 16,390 in the NQ. The S&P is traded 416,000 contracts, which is about 3 times higher than what we would normally expect. The overnight inventory 78% short, meaning the volume is 78% of the volume occurred below yesterday's settle. So coming into today, the book is skewed short. The range is 85.5 points, which is about 4 times the expected range of 20 currently. And again, the point of control is 46.11. So that's where that stands. Let's take a look at what was expected yesterday. Now, I've stopped doing these reviews, but I just wanted to, this is from yesterday. I just wanted to go over the numbers real quick. The key numbers above, as I said, the primary scenario is to pull back and then squeeze into 67 and 73.5. And on the downside, 19 is key. Below that, the double O, which looks awful here. Drew it awfully with the mouse here. So we've got the double O. So the map shows double O 1955, which was too close because the high yesterday into the open was 49.50. But the key test areas, as I pointed out, 67, 73.5 being major, 73.5. I drew circles around it here. So let's take a look and contrast that with what actually happened. I don't want to do an in-depth review. So we pushed to 50. 50 had a huge iceberg, iceberg trade there. It just kept pushing and pushing and pushing, and it traded into 46.50. It traded about 1,500 contracts and pulled back, giving us a relatively weak high at 46.50. But being as that is a mid-century figure, it looked like there's a desk that was working that price. In fact, I saw activity yesterday in the order flow that showed that there was a desk also working the 46.40. So we attempted the 46.40 multiple times right here. 46.40 multiple times, no go. We ended up with a ledge. Look at this ledge right here in the profile showing us that there was somebody actively pushing down on every retest, and it finally fails through, which was not really expected. It fails through the full session VWAP, consolidates here, comes all the way back to 42, and it gets pushed back again, comes back to 41, gets pushed back, 40 gets pushed back, 40.50 pushback, 40.50 pushback, and it finally gives in. So there was so much shoved against that 46.40 area, and it just was relentless. And at a point, it's just all those buyers into the 46.40 just lifting and finding that there was an ice working that area constantly. It was a very obvious large order and a trade desk working that price range between about 38 and 42. Just a lot of activity there, and it seemed like the book was offsides and it had to flush flush to the lower side. We ended up breaking the IB low, pulling back to VWAP to the tick here, and then extending lower, never really touching the full session mid. And then slowly, remember, 4620 was one of the key figures here. 1920 didn't quite get there. The low being 21, 21 and a quarter. And then it finally makes it back to 37, 39, gets to 42 again, puts in a higher low. So here's what I did. I saw this iceberg right here. So I took pullback longs and got stopped somewhere here, full stop. And we came all the way back. So we poked through and we pulled back to VWAP again. I read this as a higher low right here. And I look to get long into that 40 area, expecting that business would be done. The reason being, we put in the IB and we failed to push lower at that point, and so I took another long. I took another long into that 40 and end up getting stopped down here below VWAP. Gave up on it. So that's 2 strikes on the long, 2 full stops in the morning. And then it came back and it looked like it was going to try it again. And it finally breaks through. When it comes back, it looked weak again to me. I shorted it. Looking for it to fail and extend. I'm playing on the 27% probability that we would start moving towards the IB high. So I'm playing the 73% likely play back to at least the 29.30 area, and it busted out. Completely out of shape yesterday with the market completely out of the flow. A lot of noise yesterday, a lot of chop, and I took a break from about here till here, which was about an hour and a half or so, and then I ended up taking a short and taking a full stop. So that's 3 full stops. That means I am done for the day. Finished the day down, and some pretty good lifting into the high. So there's not much I could do with yesterday, and I'm only telling you this to tell you that everybody gets stopped out. Everybody, a lot of people that I see online highlight the big trades that they take, but the fact is, everybody takes stops. Everybody has a loss limit day. It happens about once a month, if that. Everybody loses. You have to lose in order to participate. I think the best analogy for this is when we walk as human beings. I have a little daughter, and I watched her go from crawling to walking. And when we walk as human beings, it is really a controlled fall. Falling seems like a negative thing, but if you walk, all you're doing is leaning forward and catching yourself in the middle of a walk. And trying to avoid that means you have to stand still. And there is no trading if you're standing still. There's no walking if you're standing still. Very weird analogy, I know, but it's just losses are just a part of this. They're not to be avoided. They're to be minimized and controlled, but you can't avoid them. Just like emotions, you can't avoid emotions in trading. What you can do is be aware of them and minimize their impact on your actions as a result of those emotions. Emotions are going to be there. I don't try to control my emotions. Yesterday was very frustrating. I'm not trying to talk myself out of it. My goal is to stick to my limits and stick to the setups and not get attached or not get active based on how I feel. And that's what's kept me in business for 21 years. So today, hopefully a better day. Didn't do much with this, but what we had yesterday is a neutral day. And it looked like we were not going to test Friday's low. So yesterday was expected to be higher. We did end up pushing up into that. Remember, yesterday was 68 and 73, as I outlined in the prior image of yesterday's review of the plan, 73.50. is the MC point of control in this area. So we expected to test the 68.7350. It pushed into 68, took care of that, and it got to 69.75, something like that. Didn't quite get to 73.50. So we're still below the big MC point of control in this area, and we're above the 46.20. So 46.7350, 46.20, these are the two big pieces that we have, and we're in between, and therefore I expect more noise this morning. The volatility has spiked. The Vol Sigma has spiked for this product, given that these closes have been very far from each other. So I expect the volatility to continue, which is a good thing, but just be attentive and don't get too caught up. The other thing you notice is this 4-tick Renko chart is filling the entire screen. In fact, it is filling the entire screen. We had Friday filling the entire screen, despite the fact that it was half a session. These are good things. And so I expect more stops. I expect more opportunity. I expect more losses, but the gains need to more than make up for the losses. And that's how we stay in the game. The goal is not to be a winner every time. The goal is to be a winner a little bit better than we're a loser. We expect the return on wins to be multiple times the losses, and that's what we get to take home. Okay, so I'm just being honest with you here. There's just no magic to this. I'm not going to sit here and pretend like I've got this figured out just because my handle is Futures Trader 71. Yes, I've been doing this a long time, and I've been doing it professionally and in prop for a long time, but there are days where I'm just blind to the market and out of the flow. Here's what's happened overnight. We had this big push up. This push up, by the way, was led by the NQ, was led by very few issues. One of the charts I actually wanted to go over with you this morning, and I'm doing my best to keep this quick, is the New York Stock Exchange breadth. The net issues were negative, and then they came back to the mid, and they remained negative into the close. Much of yesterday's rally was lifted to highs, and that's an additional reason for that short on the breakout at the 40 that ended up getting stopped out. The breadth wasn't there. It was lifted by a handful of stocks. There wasn't like a lot of broad lifting into the close, and that's characterized by the New York Stock Exchange net issues here. Yes, there was a decent recovery from about negative 450 back to positive 800, which is about as good as it gets. But really, as the market rallied, this thing was moving down. This next one that I track is the S&P net issues, or the S&P breadth, and that was singing the same to the same tune. So yesterday's rally, it's not surprising that it didn't last. And then this morning, we ended up with a small distribution and a very large distribution. A small distribution up top, a very large distribution down below, and we have what is a clear low volume node zone right here from about 4650, 4653, right into 4630 or 4628 or so. That's basically where that's basically where the noise was yesterday. So we've rejected that upper distribution, moved down, we've moved below yesterday's low, and we're opening quite bearish this morning. We're pushing up against the lower end of the range, despite the fact that we ended up with a neutral up day. We broke the IB low, we crossed it, we broke the IB high, and we finished near the IB high yesterday, and here we are below yesterday's low, or at yesterday's low. This is relatively bearish. A lot of people are going to come in today and find that their positions are not where they expected them to be, and they're likely to cover. So inventory being short about 78%. We're looking for it to pop higher, as it already is. It's balancing out already. But overall, I expect us to come back to the overnight point of control at 46.11. I'm monitoring the 46.20, 4611 for the overnight point of control, 4600, and then we're down, and then we're basically cleared for 4580, which is the key target below, and last week's low at 4582. There's a cluster of stuff at 4580. It's now a magnet. Real quick before we get into, I know I keep saying real quick and I'm talking a lot, but there's a lot to cover here today. Look at what has happened. So this is the 4673.50. This isn't a number I made up. This is what the market has screamed out. That is the most the most accepted price. We are below the most accepted price. So what we've done is we've broken to the downside, came back to it yesterday, and I'm suspecting that we found some sellers up in that 4670 area, and we are likely to complete this impulse down with a push lower. Again, I'm targeting 4580 for today. 4580 for today, and I'm looking for that to get retested again this morning. So we'll see how that works. Let's take a look at what's expected for today. I was going to go over do the overview, but we don't have the time to be able to do that today, unfortunately. I love it when the market moves around. It just creates a much easier read on what's going on, a much better story to talk about. By the way, I correct myself. The last week's low is 45.77 not 45.82. The 45.82 is the overnight low. So here's where we are. Primary scenario. So we are trading right in here. The overnight high is way up here. The overnight low is way down here. So the overnight stat will be very interesting this morning. The inventory overnight is short 78% or so. And the expectation is we are likely to continue to try to pop through this low volume zone. Remember, 53 to about 28, 29. This is the low volume zone. The expectation is it's likely to pop higher. Looking for it to get back into that 38, 39 area, which is the point of control. This is yesterday's POC. If it's going to pop, I'm going to be very interested in selling a test of that area back to the open, consolidate at the open, and I'm looking for this thing to retest 4611. So I'm looking for 4640, 3940 to 4611 as a setup with about 5 to 6 points point stop, and then I'm looking for it to test the 4600 and push towards last week's settle. I'm expecting it to bounce. I'm expecting the overnight stat to stay intact. It is very wide, but if it does not bounce against the prior settle or the 4690, then we're looking at holding for 4577, and we're looking to complete the impulse move down from last week. Okay, so that's the key scenario. The secondary scenario is we open, we pull back, consolidate into the 4620.19, chop around in here. There's a fairly small ledge here, and then if it pushes back through the open, if it tests lower and pushes back through the open, I'm looking long, and it's likely to be a short squeeze into 4650, back to the prior day's close and back to settlement, and is likely to push us back to where we were yesterday, and that sets us up for 73.50 tomorrow and above, and a squeeze back into 47.07, where the sell-off started from on Friday morning. Whew, it's a lot to digest. I know there's a lot that was talked about here, but the auction is doing its thing, and we want to track where it is. We're opening in range at the lower end of the range. Yesterday had a very distinct set of lines. at 46.40 and 46.50, 46.40 and 46.50. Key areas for today to measure things by. Those are the areas I'm looking to lean against for shorts on first tests. It's a very pronounced profile, and a pronounced auction should create some pretty good risk reward opportunities. Watch your risk. Good luck.